get to today's market action with our market panel, Tom Lee of Fundstrat and Jose Rasco of HSBC Global Private Banking and Wealth. Good afternoon to you both. I mean, it was a record week for the S&P, the Dow, and the NASDAQ. Even though we slipped here in trading for the Dow and the S&P, just the fact that we did reach new highs this week. Tom, I will start with you. How much of this is Fed? How much of this is ongoing AI enthusiasm? How much of this is economic data that continues to surprise to the upside?
It's all of the above, Morgan. It's always a good sign when not only is the S&P 500 making a new all-time high and, building on 4 consecutive months of gains, but it's coming when the other important indices like the NASDAQ and the Dow confirm those highs. I think we got a lot of good economic data recently. The economy is very resilient and corporate profits have been also surprising to the upside. But now we have monetary policy that is confirmed to be dovish and at a time when there's $6 trillion of cash on the sidelines. So to me, these are all positive signals for stocks to make further gains. And I think sentiment continues to be overly cautious.
Okay. Jose, how do you see this, especially as we have seen market leadership broaden out as well? You've now got something like 80% of the S&P 500 constituents trading above 200-day moving averages. And we did get not one, but 2 strong IPO debuts in this market this week, too.
Yeah, look, we agree with a lot with what Tom said. But I think if you look, the cyclical side of the economy is probably going to slow because rates are high. And even if the Fed cuts, rates are still high. So the cyclical side, we should see some slowing. But you've got the 4 underlying secular themes that are going to continue to drive the economy upward. And we think multiples out and the market upward as well. So we're still bullish on U.S. equities. And remember, 94, 95, at the beginning, it was a couple of stocks that led this whole thing on the tech side. And that broadened out. And we have not yet seen the power of the productivity gains we're going to see here from AI and a host of other technologies, right? And I think that has yet to happen, and that's going to help boost earnings as we go forward, and that's positive for markets. So yeah, we're bullish as well.
Okay, so Jose, when I hear you talk about cyclical parts of the market, maybe perhaps slowing here. I mean, we do have industrials trading at a record high, materials, some of these other more cyclical sectors. Does that mean that you take a step back as an investor right now and say, maybe take some profits, maybe put your money to work in other parts of the broader market?
I think you're going to see that just from a valuation perspective, right? Growth has outperformed value dramatically this year, right, year to date. And I think that's going to factor into people's decisions. You can dollar cost average your way into some pretty good stories in other sectors, but the growth perspective remains in place. And we think that's where you want to be. Remember, look at the Philly Fed from yesterday. The top line number was not great. But if you look at prices paid, came down a ton. New orders soared. And most importantly is the Philly Fed CapEx index. And that's something that for Tom's ideas and mine is crucial because it's telling you corporate America is still investing in long-term planning to build a more resilient economy. And they want to make sure they're on the front burner of that, not at the end of the train. So I think you're going to continue to see that. That's going to help lift valuations. But clearly, there's going to be some rotation of value here as growth has outperformed dramatically.